It was one of those days. It has been a few weeks, indeed, since we said this, but it was another record-setting day on Wall Street, with stocks getting a big boost from some strong economic reports. Pending home sales, contracts that are signed but not yet closed, rose 1.5% in March, just enough to reach a three-year high despite a dearth of available homes on the market. And personal income and consumer spending rose 0.2% each in March. And if you add it all up, Wall Street liked what it saw. The Dow rose 106 points today. The Nasdaq higher by 27. That was good for a 12.5-year high. And yes, we do have a new record close for the S&P 500. It closed 11 points higher, ending the session at 1593.61. Tenths of a point above the old record close. And things may be just warming up. On Wednesday, we'll get the latest read on how much homes are selling for when we get the Case-Shiller Home Price Index. And Federal Reserve policymakers will wrap up a two-day meeting on interest rates and those billions in monthly asset purchases. And then on Friday, the big economic report of the week and the month, the April employment report from the Labor Department. For more on the rise in the markets and what may come next, we get more now from Bob Pisani on the floor of the New York Stock Exchange.
Stocks powered forward again today, with the S&P 500 closing at an historic high. It's been quite a run, with the S&P 500 posting gains for 6 straight months, its longest monthly win streak since 2009. What's powering stocks? The two pillars of the rally remain. Central banks are backstopping the world, and there is nowhere else to put money that generates significant returns. It certainly isn't global growth powering stocks. Europe is still mired in recession. China is fragile, and the U.S., with subpar growth of a little more than 2%, is the best of the lot, hardly the stuff of record-high stocks. That anemic global growth is showing up in corporate revenues. While many companies are still beating on earnings, more than 40% are missing revenue targets. Take Eaton, for example, which makes electrical and automotive components all over the world. Today reported earnings that beat, but revenues that were light, with European auto parts a particular drag. Like most industrials, Eaton reaffirmed their earnings guidance for 2013, but revenue growth will be very hard to come by, perhaps only 2%. That 2% has become the new normal for both GDP and for revenue growth. For Nightly Business Report, I'm Bob Pisani on the floor of the New York Stock Exchange.